Hey guys, my name's Doug, Maximum Wealth. Glad you could join us today. We've gone over some of these things with life insurance before for you in other videos, but I still feel like there needs to be an emphasis placed on showing you the difference in the term policies that a lot of the financial entertainment is all about and what a whole life policy is there to do and help you to see the difference in the two specifically. And we would love to talk to you about it. If you want to give us a call later on, we would love to be able to talk with you and share more of the differences with you. But this is a quick overview of what you need to be looking for with the two products. Term life insurance began in the 1950s, so it's been around probably 60, 70 years. Whole life insurance has been around since the 1600s. So we've got a great deal more time and experience with whole life, meaning about 400 years or so, compared to the time period of the term policy, okay? The two greatest sections of the IRS code is Section 101A1 and Section 72. Section 101A1 says that all of the benefits of a death benefit in a term life insurance or a whole life insurance policy is tax-free. The government doesn't give out tax-frees, but that particular IRS code, Section 101A1, says the beneficiaries receive their money income tax-free in a life insurance policy. So that should be something we should be working towards in our lives, is to provide a tax-free benefit for our heirs, whether we're buying term life insurance or whole life insurance, okay? Now, the term life insurance is guaranteed in segments. We've said this on an earlier video, so we won't go over this too much, but it's limited to 10 years, it's limited to 20 years, or in some cases, if you're under age 55, limited to 30 years. After that time period, you pay that money for that product, you spend that money, the insurance company has your money, and then they take that product away so that you no longer have that life insurance, okay? The whole life contract compared to that goes all the way to age 121. You cannot outlive this product. It is a permanent product. You have a contract that guarantees that your product will never run out or you outlive it. So it is a much more stable, a much more permanent product than anything that you will ever get on the term insurance side. Now, the term insurance product does not have any living benefits. There's nothing you're going to receive. If you're the owner of the policy and you are the insured of the policy, you will not receive anything from a term life policy. The only person that receives a benefit from the term life insurance policy is the insurance company that you're paying the premiums to and the beneficiary that you leave the life insurance to if you die. Now, that brings us to the next point, is that there's only a 1% chance that you're going to die if you have a term life insurance policy. The insurance companies are masters of statistics. They understand after you give blood, after you do a urinalysis for them, after they check your background, after they check your lifestyles, they know that if they are going to stick their necks out and issue an insurance policy for you on your life for 10 years, 20 years, or 30 years, they know that most likely you're not going to die. Lightning may strike, a plane may fall out of the sky on top of you, but chances are you're not going to die. 99% of the term policies never ever pay a claim. That's a windfall of money for the life insurance companies. It is their number one moneymaker, term life insurance. You see all the advertisements on the radio, on the TV for the select terms and all the great places that sell term insurance. It's because that is the number one moneymaker for life insurance companies, because 99% of the time they get to keep all the money and only 1% of the time you get to actually pass that on to an heir, but you never receive it again Remember, the only way that it's paid out is to an heir at your death. A whole life policy that's guaranteed to age 21 also has living benefits. The money that you're putting into it earns interest in a cash value account. You are putting money into this policy by paying premiums or contributions. Part of the money goes into a cash value account for the first 1.5 to 2 years. After that, 100% of your money goes into the cash value account, supporting your life insurance, supporting that death benefit, and it is a liquid account that you actually have asset to. It has a guaranteed rate of return. It also pays dividends. Dividends are not guaranteed. Now, this living benefit section, which is obviously the opposite of the term policy because the term has no living benefits, this living benefits section is protected by Section 72 of the IRS Code, which means the cash value and the benefits as far as the other benefits that we're going to go into are paid to you tax-free. You are able to receive that tax-free. So if there's a tax-free benefit in the IRS Code, gosh, we need to take advantage of that, okay? This cash value pays and helps support your death benefit. As you're living, if you become disabled, if you get into a long-term care situation, if you get into a critical care with maybe just a heart attack or kidney failure or any type of instance that can cause you a debilitating situation, you are able to access your death benefit, your cash value, and your death benefit to be able to help support you during that disability. So this thing has a lot of different moving parts and help for you to be able to access living benefits at the same time providing you a death benefit to your heirs if you were to die. So you're getting the benefit while you're alive or have the access to it, but you also have a death benefit for your family. So when you compare these two, there's not really a comparison because this just pays a death benefit to your family. This is a contract. Yes, it is a contract that guarantees to go to age 121. It's a contract that guarantees your cash, the premiums that you paid into it, guarantees that money to be there, guarantees an interest rate on that. It guarantees that you can use the death benefit for long-term care, for critical care, and also to pay to your heirs in event of a death. So you've got an unbelievable piece of equipment here that you can use during your lifetime in addition to passing this on to heirs at your death. And it's in the form of a contract. It's a 400-year-old product, and it's protected by Section 72 of the IRS Code that says all of this is tax-free. Why would you not do that? Nothing against the term, but gosh, you just get so much more, not just at death, but all during your life. It's there available to you to use as you see fit. My name's Doug, Maximum Wealth. Thank you again for joining us. We'd love to talk with you about this, and please like our page and come back for more videos. We're here to help you. Thank you.